Continues to be the tariff hike that has come through for GAIL, Gas Authority of India. In fact, we have Mr. Rakesh Kumar Jain, Director of Finance at GAIL, now joining in, because as we all know by now, and we just heard from Mr. Tiwari of the PNGRB as well, the hike is not at what the company was seeking. It was not as much. Mr. Jain, thanks for joining in. Your first reactions, you were seeking 78 rupees a unit, but what has been agreed is closer to 69.
Good morning, ma'am. Yes, we submitted our tariff of 78 rupees way back in August 24. And if you see in terms of net present value, it should have been around 81, 82 rupees. Yesterday night, PNGRB has issued tariff order, which says tariff approved as 65.69 rupees. However, it's on interim relief basis. Actually, it's not a regular tariff order they are saying. They are saying interim relief, and regular tariff order will be issued in April 28. Actually, tariff orders are normally issued in a block of 5 years, but regulation also says if there are significant change in the principles of parameter based on which the tariff was revised, we can, or PNGRB can ask us to submit, or we can approach PNGRB. So this time, in this case, PNGRB asked us to file the midterm review, and we filed it. Normally, whenever tariff is reviewed, all the parameters based on which tariff is reviewed is allowed, but this time PNGRB has allowed only those two parameters with respect to system use, gas and pipeline capacity. And order says that everything else certainly will be allowed. The order itself is saying, and in April 28.
But you have to wait a little longer. So let's break this down. That's the thing. They've only taken two parameters into consideration. A lot of the other parameters, including capex and opex, in this order, they've not been taken into consideration. Now, the current tariff is set at 65 rupees 69, 65.69 per mmBtu. At this kind of a tariff, to what extent do you get a help to your EBITDA? There are some estimates on the street. Brokers are saying it could be boosting your EBITDA by 10-12%. But you tell us.
It will increase by 1,200 crore rupees per annum based on existing volume. And next year, we are also expecting at least 8 to 10% volume hike. So therefore, it will be around 1,300 to 1,350 crore rupees.
Okay. So this year, your EBITDA gets a boost of about 1,200. Next year, the EBITDA boost could be 1,300 to 1,400 rupees. Is that right?
Yes.
Okay. So the question is now, PNGRB told us that you don't have any recourse. I don't know if you can approach any other appellate or anything like that. Or is it that you just wait it out and now wait for the next leg of an increase, which will come in FY28?
Certainly, we will go through the tariff order first because it has been issued last night. In terms of recourse are available. If we feel that there are concerns in the tariff order, so we can approach PNGR if there are some issues in errors, and then recourse are available. But we have not gone through the order, so therefore difficult to comment on this moment. But there is one positive line in the tariff order that it's an interim relief. So we are reviewing it, whether the interim relief is also having some issues or then we need to take up. I only can say the delay in tariff order only impacts customers. As a pipeline entity, we are eligible for 15% pre-tax return because the tariff is calculated on discounted cash flow methodology where net present value will be considered. So any delay in tariff does not hurt us. It can be delayed available, but it will be available at 15% pre-tax return basis.
So the reason I'm asking is that you just told us that if you go by net present value, then with the current operating environment, you would have actually wanted 81 rupees, not even 78 rupees, looking at the current. So there's a lot of gaps. There is a 15 to 16 rupee gap in what you've received and what you think you need. So how will you adjust for this?
No, actually, 8 rupees, and since it was delayed, our submission, if we would have submitted right now 81 rupees. Normally, whenever PNGRB processes the tariff, they moderate certain future capital expenditure and operating expenditure and true up in next revision. So we were expecting the tariff based on those revisions should be 72 rupees, but it has come down to 65 rupees, 69 rupees. There is a gap from our expectations of around 5-6 rupees. And since we are yet to go through the tariff order, we'll see what are those parameters based on which tariff has been moderated, and certainly if we feel that there are issues, we'll certainly take up suitably.
Okay, all right. And that's an important clarification that if you just go by the parameters that PNGRB has used, which are 2 parameters right now, then you think that between your expectations and the current order, the gap is about 5 rupees or so, not as much as 15 rupees.
Just to clear the air, sir, you'll be passing on these higher tariffs to your customers, right?
Actually, we do not have any choice. We do not have any choice in terms of regulation. We have to apply the tariff approved by PNGRB on non-discriminatory basis to every customer.
Okay. Sir, by when do you think you'll go back to the board, if at all, once you go through the order? Should we expect something? Can we connect with you maybe next week?
Yeah.
Because your investors need to know.
Let us go through it.
Yeah.
Hopefully next week we should be able to tell you.
Okay. Okay. All right. Fair enough, sir. So I think we'll give it a couple of days and then GAIL will decide if it is indeed accepting the current order in the current form or whether it needs maybe a round of conversations and negotiations with the board itself. Thank you very much, Mr. Jain, for joining in. That's very helpful. It does clear the air. So there we have it. The whole arithmetic and the math of the order. They had originally asked for 78 rupees per unit. They've got around 65 rupees per unit. They're saying there's a mismatch of about 5 rupees from their expectation. Going by the current parameters that the board has used, the board has only used 2 parameters. It has not considered capex and opex in arriving at this order. It's an interim relief. And I think, the stock right now is reacting down about 6%.
Yeah, I'll be interested to see whether or not there is some buying interest at lower levels actually, Surbhi, because, some part of the street believe that they hadn't factored in this increase itself.
They were getting nothing.
Yeah, some part of that. So, a large part of them also were factoring in something. So let's see whether or not that 170 odd level does hold out on GAIL. But let's get